I know yesterday there was net inflows of over $1 billion with the Bitcoin ETFs, but the Bitcoin network only created $65 million worth of new Bitcoin into circulation. So that's 15 times more demand in one day than the daily supply.
For more in the market's action, let's bring in Brian Dixon, CEO of Off the Chain Capital. Welcome to the show, Brian.
Thanks so much for having me. I appreciate it.
Brian, Bitcoin can't seem to catch a break here. It's been trading above 70,000 for quite a few days now. This morning, it hit another all-time high of $73,678. In addition to the overall positive sentiment in the industry right now, I'm sure some of that price action is in anticipation of the halving. Do you expect to see lower levels after April?
So I think that we'll probably see some drawbacks at different points in time throughout this next cycle, but I think we're going to be going up from where we're at right now largely. Now, if we think about the halving that's going to occur next month, as of today, there's 900 Bitcoin produced by the network each day. When the halving occurs in late April, that's going to get cut in half to 450 Bitcoin that'll be produced each day. And if we look at the tremendous demand from the Bitcoin ETFs, we're already seeing that drive a price appreciation. So as of right now, there is 10 to 15 times more daily demand we've seen over the last couple of weeks through the Bitcoin ETFs than there is daily supply created by the network. I know yesterday there was net inflows of over $1 billion with the Bitcoin ETFs, but the Bitcoin network only created $65 million worth of new Bitcoin into circulation. So that's 15 times more demand in one day than the daily supply. And so as long as this demand continues, I believe when we enter the halving next month and that gets cut in half in terms of the Bitcoin being produced into circulation each day, that's really going to continue to drive price appreciation.
So, of course, probably the biggest story in crypto today is the Dencun upgrade. How significant is the upgrade in your opinion, and what price action do you expect to see after the upgrade today?
So I think it's a very important milestone for the Ethereum network because one of the biggest challenges Ethereum's had for quite some time is the scalability and the cost of gas fees for transactions. And other competitors like Solana are really gaining a lot of market share on Ethereum because the user experience is not pricing out the retail investor from doing transactions because Solana is very efficient and more cost effective. And so if Ethereum is able to move through this and accomplish this successfully, I think it will add value to the network. In terms of price with Ethereum right now, I don't really see the Dencun upgrade as much of a price driver as I do the anticipation of an Ethereum ETF. I think a lot of people are loading up on Ethereum expecting it to have a similar impact that Bitcoin did whenever the Bitcoin ETF was passed because there was tremendous price appreciation. And I think there's a lot more people that are allocating for that reason. But I do think there is a percentage that are expecting the upgrade to be really beneficial as well.
So speaking of the potential ETH ETF, a listener wrote in to ask about the potential rejection by the SEC against the ETF. And, there's been some chatter this week that the ETF might not happen after all, given that there hasn't really been any noise around it from the SEC. And, the deadline is in 2 months, which isn't that far away. So say an ETH ETF doesn't get approved or, is likely not happening anytime soon. How big of a negative impact is this going to have on ETH?
I think it would be some short-term volatility and probably a minimal drawdown on it. But I do think eventually in the long term, an Ethereum ETF will be approved. I think one of the things that's probably going through the heads of the regulators right now is there seemed to be a little bit of a turf war over who's going to govern Ethereum, whether that's a security or whether that's a commodity. And if we look historically, it took a very long time for the Bitcoin ETF to get approved. And a lot of people in the market will note that now that we have a Bitcoin ETF, there's better precedent to approve an Ethereum ETF. And I would agree with that. But I think on the flip side, you also have to think that the Bitcoin ETF was not approved easily, right? Like Grayscale had to go in and actually pursue litigation against the SEC to get them to go back and reconsider their Bitcoin ETF filing. And I think that was a huge positive for the industry when they won that case, being able to get that approved. And so if we see any type of history repeat itself in terms of the delays in getting an ETF approval, I wouldn't be surprised if the SEC continued to delay a decision on that.
Speaking of Grayscale for a second here and Bitcoin ETFs, Grayscale yesterday filed for a mini GBTC fund that, in my understanding, the main difference is that this new fund has lower management fees, which GBTC has a very high fee at 1.5%, which is much, much higher than its competitors. Why wouldn't they just lower the fees on GBTC?
Well, I think there's a couple reasons. One is that the existing product is the largest Bitcoin fund in the world, the most longstanding fund being managed by a crypto native firm, right? It's not a traditional asset manager coming in, launching a new crypto product. This is somebody that's been in the space for a very long time. Another thing is that if you're a trader and you want to go in and trade, you want to go into the deepest and most liquid market because that's going to minimize the amount of slippage that you're going to have for executing a transaction. And there's some times where if it's not a deep and liquid market like Grayscale's is, that the amount of slippage that could occur from a transaction could actually exceed the 1.5% fee that Grayscale is charging. So a trader may want to go into the existing GBTC product for short-term trading purposes because they could execute a transaction and create better price on their execution. And that could actually command a premium on the price for the fees with Grayscale. I also think Grayscale looks at itself as it has this long-term premium brand in the space and that it believes it can charge a 1.5% fee on this particular product. And I believe the reason they're launching this new product is because they also want to have a competitive product with new entrants to the market. And so by putting a new product out, and I'm assuming we'll have much lower fee structure, we just don't know yet, that will be able to leverage their brand to then attract new AUM for a similar product while also continuing to have this much larger scale product on the market.
So I want to go back to markets here for a second, and specifically the macro environment. Ken Griffin yesterday said on a panel that the Fed should be careful about lowering interest rates too quickly, especially given the most recent CPI report that showed that inflation picked up again. Do you agree with that? And how much are lower rates priced in right now?
In my opinion, the whole raising and lowering of interest rates is a rather big illusion to the public because whenever you actually get the reported inflation numbers, they're excluding key data points such as food and energy. Well, what's the one thing the entire US economy uses every day? Food and energy, right? So by removing these data points from reported inflation, we're never getting an accurate picture of what inflation really looks like. And it's always significantly higher, in my opinion, than what's ever reported. And so as they do this illusionary game of raising and lowering interest rates, they raise them and then it's going to slow down spending because borrowing capital becomes more expensive. And then they lower them to increase spending to create more economic activity. And to me, it's just a very short-term illusion that doesn't fix the long-term issue, because if it was really fixing inflation, I'd still be paying 70 cents for a gallon of gas like I did when I was 16 years old, right? And so with that, I do think they've raised them really high because the spending was out of control. And I think what King Griffin is saying is he doesn't want them to lower them too quickly and then have to re-raise them because that could create like an economic whiplash. And I understand his point of view there. I do think that the rates have been high for a period of time now, and they're probably going to start creeping down. I don't know how quickly, but I do think we're reaching a point where they need to start coming down a little bit because they need to start stimulating more economic activity. But what really needs to get put in check is the government spending.
So besides government spending and inflation, are there any other macro factors that you think crypto traders should be watching, or are those the main two that are important for crypto markets?
So I think the spending is a huge one because the more money that's going to be spent, the more likely it is that I think the digital asset ecosystem will thrive over time. Other macro factors, I think it really depends on the asset that you're looking at. So definitely government spending, the way that central banks and governments are operating around the world is going to have a lot of impact on Bitcoin, in my opinion. If we're looking at some of the other digital assets, like some of the smart contracting platforms from a macro perspective, I would look much more into how other countries are developing on these protocols, because that's really interesting to me, because when you see things concentrated in a certain area for development of some of these protocols, it may not be as decentralized as we would like it to be. I know specific to the United States, we have the stablecoin bill that's been working its way through the legislature, and we have the market structure bill for crypto. Those are two very, very important things. Stablecoins specifically because banks all around the world, I believe, will be integrated much more with stablecoins over time. And the market structure bill is going to hopefully give us regulatory clarity for our industry, which we've been wanting for so long, on what's governed by the SEC, what's governed by the CFTC, give us a much better understanding of the sandbox that everyone's playing in, so these entrepreneurs know how to build and operate more effectively.
So I want to talk about Coinbase briefly, who, has been in the news in the past few weeks, and, not in a good way necessarily, because during the several rallies that Bitcoin saw over the past month, Coinbase crashed multiple times. Now, I've heard some of my sources say that they've built these sort of crashes into their system, that they basically anticipate that because it's happened so many times before. But what's your take on that?
So I don't know if they build the crashes into the system. If that's
No,
true,
market makers build the
oh,
crashes
got
into
it.
their system. Yeah.
Understood. Sorry, I misunderstood the question. So I don't know the answer to that. I think what my opinion is on it is if we look historically with Coinbase, in May of 2020, which was the last Bitcoin halving, Coinbase crashed soon after that. And so what that tells me is they're having a huge influx of customer demand and their system has been unable to handle it. And they probably did a ton of software work to fix those issues after it happened in 2020. And to see it happening again means they're probably having a multitude more of customer demand with institutions and retail investors on the platform. And what we saw last time Coinbase crashed, it was right around the time that started the last crypto bull cycle that happened for 12 to 18 months post-halving cycle. And we have the halving next month. We're seeing Coinbase crash multiple times over the last couple weeks. And so the question that's interesting to me is this signaling an indicator of the next crypto bull cycle that may happen throughout the next 12 to 18 months?
Wow. Who would have thought that this could, potentially be a good thing? All right. Thanks for coming on, Brian. That was Brian Dixon, CEO of Off the Chain Capital.
Thanks so much for having me.
That's it for today's show.